Let's kick off with some news that fuel prices are set to come down. We've got a softer oil price, a shilling rally helping to bring fuel prices down. This should, of course, be good news to many businesses, Kenyans. Is this a sign that inflation is starting to peak or is going to start peaking?
Yeah, I think inflation is going to start easing in a couple of months. If we're looking at the next, maybe from March, April, we expect that to start easing quite significantly. And so from our point of view, if you're looking at the Monetary Policy Committee, we think the central bank rate could start coming off, at the very latest in the month of May.
Now, just moving on to staying with the currency somewhat, the central bank has been in the market, being quite active in the market in terms of mopping up liquidity, absorbing around 2.6 billion shillings of liquidity through repos last week. To what extent do you see the rally in the shilling being helped by what the central bank is doing?
I think it can only be very temporary, and I don't think the central bank is very keen to intervene in a big way. I think because we already touched a psychological mark of about 100 to the dollar, and if you look at the limited intervention that the central bank made during last week, it suggests that we're only going to see very limited interventions just to limit the volatility. But in the longer term, I think they're going to just leave the currency to just play in the market.
So really there to smooth out volatility. Let's turn over to the equity market. Safaricom was one of the top gainers last week, accounting for half of the volume that we saw on the market. Some news emerged that it had added around 600,000 new customers in the 3 months to September, still got a leading market share of just over 67%. What are your views on investing in Safaricom right now? We know that stock has been quite punished in 2011.
Yeah, I mean, if you look at the trading side, earlier on the week, we had foreign investors buying into the counter. And then towards the close of the week, when that data came out in terms of the comparison, we started seeing also locals starting to have a look at it. The numbers are somewhat backward looking. So if you look at September last year, we already have the numbers in terms of Safaricom's performance. So what the numbers did was just to give us an indication of the sector performance. And I think investors were quite happy with the overall performance. Obviously, if you look at the month of September, that was just, if you look at October, that was just 1 month later after the numbers that were just released. That was when Safaricom actually increased the tariff. And actually that period, post that period, that would actually provide a much more meaningful insight into how the sector as a whole is performing post the tariff increment.
It'll be also interesting to see how the competitive space is playing out. Just looking at those numbers, Bharti, Airtel adding almost the same number of customers that Safaricom added in this quarter. So really catching up to Safaricom. Of course, Safaricom is still the dominant player, but should Safaricom be watching its back closely with regard to the likes of Bharti?
I think so, but I think increasingly now they'll be looking at how to maintain value. I think they don't really mind not getting as many additional subscribers, of the net adds, but they'll be looking at, first of all, maintaining their current market share in terms of their current number of subscribers, and also maintaining revenue market share. If you look at the new additions, most likely the revenue, from a revenue perspective, they don't add that much. So I think they might be looking at maintaining the high revenue, from that point of view. So I think they're a bit concerned, but they probably want the competitors to gain a number of subscribers. Maybe that will ease the pressure off. But from their tariff increment, it appears that they've done reasonably well. I think on the internet side, that's where they might not do as well, even though we've seen the traffic increasing quite significantly. Because of the discounting, they don't appear, we think the sector as a whole is not doing as well as that the data suggests. So we'll just wait and see what happens in coming months.
And overall, it's not just about mobile phones and accessing cell phones, it's also about data and accessing the internet. You've got internet penetration now sitting at around 36% in Kenya, and this is rising quite rapidly. You've got infrastructure rollout taking place. How the likes of Access Kenya and then, of course, Safaricom going to benefit from the expected boom in broadband and internet services?
Well, it depends. We now have quite a number of formidable competitors, particularly offering broadband internet, fiber optic to the homes. Wananchi comes to mind in terms of the mass market. So in the short term, we think predominantly data is going to be accessed through the mobile phone, but the tariff and usage is going to be really determinant here. If you look at the tariff, it's not been very aggressive, so I think that's going to help. The numbers as well have been good, but the larger users will probably move away from mobile and then probably focus more on fiber optic as a delivery mode. WiMAX also as a broadband channel is quite important, and so Access Kenya should also see some numbers there, but depending on the pricing, because also you have Safaricom, which introduced its own division to deliver broadband internet wirelessly.
Let's quickly focus in on the banking sector. Court of the trade there last week was around banking stocks. We had the likes of Co-op on the one hand rallying by 4%, and then KCB and Equity being punished once again. Those stocks are falling back into negative territory. What are your views on investing in banking stocks right now with the high interest rate regime?
Well, the sector as a whole should remain relatively stable. I think most of the position taking now is around the 2011 numbers. So going forward, I think the main concern for investors is on the finance bill, where members of parliament have been looking to regulate the interest rate spread. So that I think is something that is concerning investors. Nothing is firm yet. The finance minister doesn't appear very keen to legislate on interest rate spreads.
Yeah.
But given the current standoff, you can't help to be a bit concerned about the position.
Of course, concerns around margins, concerns around bad debts going forward. KCB and Equity particularly are being sold off by foreigners, it seems, and that's interesting to note, given the fact that they are favorite stocks of many local analysts, many local investors. Why do foreigners continue to punish these stocks then?
Yeah, I think there's also an element of demand and supply, and at this time we've seen a bit of selling by foreign investors. But if you look at the local institutional point of view, which would probably take up the bulk of that supply, they've been a bit quiet. They've been focusing on debt. And so from that perspective, there's been a mismatch in terms of demand and supply. And if you look at the overall volumes, they are really not that significant. We're almost operating at 30–40% of what, on average, the market should be operating. Yeah. So I think that could really be what is driving the sell-offs. Yeah, and one would anticipate volumes to really pick up this week as the real trading, second week of trading gets underway. Eric, we'll leave it at that. Eric Musau, research analyst from Standard Investment Bank.